The rest of the day. Now, we've talked about this often on the program, the huge boom in luxury goods over the past, decade or so, but mostly fueled by wealthy emerging market buyers buying everything, from high-end handbags to yummy fine wines. But could the good times be coming to an end? Well, let's just take a look at some of the headwinds facing this industry. The Economist estimated last year that about half of all luxury spending in the world is done by the Chinese shoppers. All of this was fine and good, oh yes, when China was growing at a blistering pace, but that's no longer the case. Last year, China's economy grew at its slowest rate since 1990, and it's expected to slow again this year. Then there's the Chinese crackdown on corruption. According to Deloitte, the government's crackdown on the gift-giving of luxury items has caused some high-end brands to lose 40 to 50% of their business share. This year, luxury retailers will also have to contend with what? Well, we've got Russia's economy going off the rails, Japan and Europe battling deflation, and of course, folks in the Middle East feeling less flush about the price of oil. Let's get more on this. Sarbjit Chahal, is Senior Equity Advisor at Fat Profits. Sarb, great to have you with us. Sorry about that. God, when you combine all of that, right? Russia, China, deflation in Europe and that, I'm wondering if this is keeping the bosses of luxury good makers awake at night.
I think to some extent it probably is, Aaron. But I think looking at the overall picture here, we've got a situation with, yes, the Russian economy is in some strife. Luxury goods sales there are down 7%. China is obviously the largest market, as you've already mentioned, and growth over there is slowing, but there's still growth there, and I think that if we actually look at the Chinese story there, growth is stabilising around 7%, so we could start to see later on in the year some tailwinds pushing through to the luxury good market.
So we're still seeing a lot of Chinese buying the luxury goods, but the rate that we've seen over the past decade is slowing. Is that what we're saying? So, I mean, to contend with all of this, what do the luxury goods makers do? Do they sort of sit around the boardroom and have a refocus on their own home markets? What about the US? I mean, there's an economy that, is recovering, many will say, quite healthy. Is there a focus on the US?
Yeah, well, we've seen growth there, and I think that that's the important thing, is that sometimes you can look at all the doom and gloom surrounding a particular sector, but if you break down the numbers, 6% growth in luxury goods sales in the US, Japan 10% up, which is significant, and it's no surprise that's really where LVMH's organic growth has come from. In the last year, it's come 6% from the US, 9% in Japan. So there are some reasons why we should see profit generations for the luxury goods sector.
And that's interesting with Japan, and it's well, they've had deflation for so long, they're probably just used to it, aren't they? Who knows? You just mentioned sort of a boost in profits. I'm wondering, we've seen the euro, if we talk about the European luxury good makers, most of them based there, within Europe and mostly within the Eurozone, but the euro has the value, hasn't it? It's plunged. So when they're flogging their goods overseas, this has got to be, and bringing the money back, this has got to be a bonus.
Without a doubt. That's probably going to be one of the biggest tailwinds for LVMH this year, will be the fact that we've got the euro at a 10-year low versus the dollar. And it's the biggest luxury goods brand in the world. So they sell right across the board, not only in products, but also geographical, in terms of where they are. So when they're bringing that money back, they're getting more bang for their buck, as it were, with the conversion. So it's certainly going to provide a tailwind, in our view, for the stock.
Can I just quickly throw this in? I mean, we're talking about oil prices, and we're talking about our good folks down in the Middle East who have been living off very nice high oil prices for some time. Are we seeing any impact? Are you seeing any numbers coming through that if they're making less money, they're spending less money on luxury goods?
Well, I think that the luxury goods market, even when we've seen things like the global financial crisis, yes, it had an effect, but the pickup was very, very quick off the back of that. And we'd expect to see exactly the same thing here, is that areas like the Middle East, like Saudi Arabia, they can sustain these lower oil prices. But I think that once we get back to normality, shall we say, with the oil price, that I think spending will go back to usual levels.
Okay, Sab, great stuff as always. Sarbjit Chahal joining us from Fat Profits. Love that name. It's an Aussie name, by the way.